Hey everyone, this is Darren. Welcome to another Density Insights episode. In the past, we have covered the UK real estate market with Yarosh, which you can find on our YouTube channel. In that episode, we focused more on the London real estate market, which has been a hot market for overseas investors. Interestingly, there are more overseas investors shifted gear towards other regions in the UK when looking to purchase their second homes, such as Manchester, Birmingham, and Liverpool. Today, we have Gordon, a real estate agent and mortgage broker, to share his insights on those regions. I hope you find this episode interesting. And please follow our channel and let us know what you like or don't like about our show. Cheers. Hey Gordon, welcome to the show.
Hi Darren, how are you?
Very good, very good. So I remember we met, I think a while back, and then it's interesting because like a couple years ago, investing outside of UK being a very big trend, and then it's very good to have you today to talk more about it. So for the audience may not know who you are, would you mind telling them about yourself and the company you work for?
Okay, sure, Darren. Hi everyone. First of all, my name is Gordon Franks. I'm the managing partner of Lifestyle Brokers, which is part of the business class group here in Hong Kong. I've been here now for just over 16 years, so relatively settled in Hong Kong. And the main part of our business is helping our Asian-based clients to purchase property overseas. But I'd say with a focus on the UK over the last 5 or 10 years.
Yeah, so I think it's interesting because a lot of people before only focus on London, and then everyone right now is considering places outside London. So would you mind telling the audience the reason behind that?
Okay, I think London's been very popular, of course. London will always be London, not saying the obvious there, but it's done very well from capital appreciation point of view over the last 8 or 10 years. But as with everything, prices are cyclical, and we feel it's become quite toppy at the moment, and it's harder and harder to find the right places to invest. Over the long term, of course, London will always do well, but taking a shorter term viewpoint, I think growth is more in the regional cities of the UK now, and that's where people are becoming more interested. Prices are lower outside of London, yields are higher, and as a result, really, it's easier to enter those markets and hopefully get greater levels of capital appreciation.
I see. So for the people who are not familiar with cities outside of London, would you mind explaining briefly the regions and areas that overseas investors tend to invest, and then same time is that how you just kind of distinguish the difference in terms of risk and reward in those areas?
Okay, sure. I think the main areas outside of London are really the northern powerhouse cities. Cities everyone's familiar with, such as Manchester, Liverpool, Leeds, and then there's also Birmingham, which is more central in the UK. Those are cities where they're getting a lot of investment for. If you take Manchester and Birmingham in particular, there's a new high-speed rail link which is connecting London to the two of those, where you'll be able to get from London to Birmingham in about 50 minutes and London to Manchester in about 1 hour 20. So it's certainly going to reduce commuting times to the city, and it's putting a lot of investment into these big cities now, which is pushing prices up. If I had to pick the two most popular, or the two in isolation, I'd probably choose Manchester and Birmingham. Now, Manchester has done very well over the last 3 or 5 years. It's had a lot of interest, a lot of marketing. People know it because of the football clubs, bizarrely enough. But prices have gone up in Manchester over the last 3 or 5 years, and there is inherent risk of oversupply now. So if we're investing in Manchester, it's vitally important we choose the right locations or the right parts of Manchester. So as a company, we tend to prefer smaller, more boutique developments. It's what the local market likes. And choosing the right areas. There's regeneration sectors in Manchester. There's the Noma regeneration section as well, where over £1 billion is going to be spent over the coming 15 years in completely redeveloping the city. So that's why Manchester can be a good place to invest, but also choosing the right places. And risk and reward is the same as with any property or any location. Of course, if it looks too good on the tin, it often is. I think when you're looking for investment, you're either looking for a capital appreciation play or a yield play. Very rarely would you get both combined in one investment. And that's where you weigh up what you're looking for from investment and level of risk you want to undertake. Of course, there's always less risk with developed markets, and the more regeneration was going on, as much as more potential for capital appreciation, is a little bit more risk attached to that as well. So that's Manchester. If we take Birmingham, I don't know how familiar people are with Birmingham, but that's more central in the UK and will be about a 1 hour 20 commute. London, once the HS2 rail link is actually in play. And Birmingham's the first stop as well, so the first one it gets to. Birmingham's had a lot of investment as well, about £1.5 billion invested into Birmingham, regenerating it and making it look a lot better and more attractive than it has been over the last 10 or 20 years. What we see in Birmingham is grade A office space is actually about a third of the cost of what it is in London. So we're seeing a lot of companies relocate away from London and into Birmingham. We've seen Deutsche Bank, HSBC, Linklaters, HMRC, which is a tax office in the UK, all established big offices in Birmingham. So lots and lots of companies are moving there, which of course is pushing demand up for rental properties, which pushes demand up in capital appreciation as well in Birmingham. Now, I don't ever believe, as much as we say it's 50 minutes to commute from Birmingham to London, it will never be a commuter belt to London, as some people might try and make out from a marketing point of view. But what you will see with these firms relocating to Birmingham is a lot of graduate packages or graduate roles moving to Birmingham rather than London. And the companies will move their employees or take their employees to London for day trips, as and when needed. But they don't need to pay the London waiting for salary, London waiting for office space. It's much more cost effective from a company's point of view. So that's Birmingham, really, and why that's attractive. If anything, I think Birmingham offers better growth potential than Manchester at the moment, purely because where it was a few years ago, which has been marketed well now.
I see. Among the popular cities around their regions, right? Is there any area you think is overrated or underrated?
Overrated, I'd probably say places like Liverpool. Now that's hard because I went to university there, so I love Liverpool. Yeah. But if we're taking an investment point of view, Liverpool has got a lot of regeneration going on in it, but at the same time, it's not at the same level of Birmingham or Manchester. It will take a lot more time to go into play. So I'd say Liverpool is a much longer term viewpoint, sort of 8 to 15 years, rather than a 3 to 5 year viewpoint you might have in places like Manchester and Birmingham. Additionally, a lot of the properties in Liverpool are quite cheap, sub £100,000. Now you may say that's a good thing because you can pay cash for it, or some Hong Kong investors can pay cash for it. But at the same time, mortgages can be your friend. Money's quite cheap at the moment, and there's tax advantages to having mortgages in place as well. So I'd always suggest that you take sensible finance out on a property, buy a property in a better location, with better potential for capital appreciation. So that's underrated, sorry Liverpool, but an overrated point of view, sorry, that was overrated, not underrated. It's Liverpool.
It's okay. Mm-hmm.
From the other spectrum, in terms of where it's underrated, again, you go back to the likes of Manchester and Birmingham, but it's hard to say they're underrated because they're very popular and they're getting a lot of interest at the moment. If I had to choose somewhere, I think I'd say Edinburgh in Scotland. Edinburgh is a beautiful city. It's the 4th largest financial hub in Europe. And there's a huge undersupply risk, but it's very hard to build properties there just due to the area and the location. So prices tend to always go one way in Edinburgh. It's a very attractive place to invest as well. It's more expensive than Birmingham and Manchester. It's less than London, but it fits into the budget for some clients and it's a little bit different. It can get higher yields as well. So I'd probably say Edinburgh is a place to look for our investors.
That's interesting, because it's really rare for, at least we're in Hong Kong, it's very rare for me to come by with investments for Edinburgh. So, I think something that we can explore further. And then, what are things that the investor should be aware of when investing in cities outside of London? And are there any difference compared to invest in London? And what factor should investor need to factor in when it comes to this kind of investment?
I think fundamentally, the factors you look at when you make an investment are all the same, whether you're looking at London, Manchester, Birmingham or Edinburgh, but it's based upon the numbers and you don't want to become emotive about the purchase. For most people, you're never going to live in this property. You may never even see the property. So you can think of it as a grey box in a grey town, for want of a better word. It's purely investment driven in terms of how much is it costing me, how much capital do I need to invest into it, how much will it go up by, And will the rent cover its costs, or ideally give me a yield? So we're always looking at location, and there's got to be a good story attached to where you invest as well, in terms of why will it go up in value over time? What's the reason behind the capital appreciation? You've got to dig a bit deeper in cities outside of London for that to see really, is it a bit of a fad? Is it hype? Or is it truly going to happen? And will it really push prices up, and will it really increase demand in these cities? So what we do at Lifestyle is a lot of due diligence behind the scenes on all the projects we launch. And we get offered literally 100 projects a year from developers throughout the UK and in Asia, the UK markets, but we probably tend to launch only 10 or 15 because we make sure that we cover the DD behind the scenes and that the regeneration will happen and that you're getting the best possible investment in the right area based upon clients' criteria.
I see. So right now, right? Obviously, right now is we're post COVID-19, and then like things are getting better. Why should foreign investor need to take advantage now to invest in those cities?
Ultimately, it's a great time to invest, and that's not just saying it from a sales point of view. There's always a good time to go into property. Property tends to only go one way if you take a 10 or 15-year viewpoint, no matter where you buy. But in terms of why now in particular, there's 2 or 3 reasons, one of which is for our Asian-based investors, the pound is very, very weak. So compared to 2 or 3 years ago, you're getting 20, 25% more pounds for your money using US dollars or Hong Kong dollars. When I first came to Hong Kong back in 2006 or 5 or 6, it was 16 to the pound. So it's almost 16% better off now buying it. So there's 2 ways to make money there, one of which is from the appreciation of the assets, and the other one is from the appreciation of the currency. If the pound goes back up to 12, you've made 20% of currency gains, which is quite nice regardless of the gains of the property. Secondly, the market is a good time. It has been depressed slightly by COVID-19, but there's a lot of interest coming back. In fact, the UK is hitting record highs in certain parts of the UK now. So the market is going up again. And the government, due to COVID and to stimulate the market, has done stamp duty concessions up till the end of March next year, meaning investors can save up to £15,000 on stamp duty. So when you factor in the currency, the place of the market, the demand, and the stamp duty savings, now is the time to jump onto the market. It really is.
I see. No, I think you did a great job, because even for me, it's a very good condensed, precise points that I want to know. Is okay, if I am an investor in Hong Kong, there's a lot of choices. I can go to US, Australia, different places, and then for you summarized a very good way explaining to people that where should you go or would you consider in UK. So I want to know, right? For people who want to reach out to you to talk more about your services, right? How we suggest them to reach out to you?
Okay, well, the best way to contact us is via website or WhatsApp or call. So if you want me to give my details now or not, I think people can see it under the video, my phone number and email address. Go to our website, which is lfsproperty.com.
Yeah.
I must say, sorry.
No, go ahead. Go for it.
I think a lot of people in Hong Kong throughout the world look at websites, look at property articles in the paper and make a decision as to whether that's the right one for them or not. But what I would say is advice has to be tailored to the individual. Your needs are different to my needs, Darren, and different to anybody we're speaking to or who's watching this video at the moment. So what I tend to do is try and listen to my clients and find out exactly what they're looking for from the property market, and then find them the right property at the right time. We may not have it immediately. As much as now is the time to invest, we may have to wait a few months till the right project comes on board, but we can get the right one for the client at the right time.
That's good. I think that's a really good pointer. And then I'll say thanks a lot for your time, because this is very good. And then I hope that you come on board for a second round next time.
Okay, perfect. More than happy to do so.
Yeah. Thank you, and have a good day, Dan.
Cheers. Bye.
Okay, bye. Thanks for watching. What do you think of this episode? Please let us know in the comment below, and be sure to hit the subscribe button to keep in touch with us for upcoming videos. But before we go, I want to give a big shout out to Patina Design Lab. They're the one who help us in making our brand, our direction, as well as these videos. They are a strategic design consultancy firm to help businesses with a wide range of design services, from industrial design, branding, graphic design, art direction, content creation, and many more. They are a very talented bunch, and I urge you to check out their website for their work. That's all for today, and see you next time. Cheers.